for joining us today. We here at the department are thrilled at the opportunity to be able to use technology to reach out to our small business owners, our CPAs, attorneys, and practitioners alike. Now, before I turn it over to the tax commissioner for his words of welcome, there are a few items I want to go over with you guys to make sure that you get your full experience, that you get everything out of it. So the first item has to do with CPE and CLE hours. So the CPE and CLE hours today are going to be tracked via two methods. The first is how long you stay logged into the webinar. The second is your ability to properly identify code words. So throughout today's presentations, we will be giving out a total of 6 code words. Those code words will be shown as part of the presentation on your screen, as well as verbally communicated by the presenters. You'll know that the presenter is about ready to give a code word because they'll say something along these lines. And at this time, we will pause to recognize the code word. In this case, as you can see on your screen, the code word is example. Now, those code words will stay up on the screen for approximately 5 seconds, so I highly recommend that anytime you see and or hear a code word, that you go ahead and write it down. Because upon the conclusion of today's OVTA, you will be prompted to identify those code words via multiple choice and in chronological order. Item number 2 has to do with the reporting of CPE and CLEs. For those of you who are CPAs, you will receive an electronic certificate of completion with all required reporting information by Wednesday, May 30th. For those of you who are attorneys, we will be uploading and submitting CLE credit on your behalf, which will be available for view on the Supreme Court website by that same day of Wednesday, May 30th. And for the final item, it has to do with questions and answers. So we know that based upon the amount of people we have in attendance and our structured agenda, that we may not be able to get to all your questions today as you ask them. But we ask that you please go ahead and continue to submit your questions throughout the presentations. So we do have a dedicated staff of subject matter experts behind the scenes that will be fielding and responding to as many questions as they can. So please continue to submit those through the chat feature. We will also be utilizing the OVTA software to be able to record those questions. We will then take those questions, we will get answers for them, and we will have them posted to the OVTA webpage through tax.ohio.gov. They'll be posted to the FAQ section by that same date of May 30th. And at this time, I'm going to go ahead and turn it over to the tax commissioner for his words of welcome. Thank you.
Tax Commissioner, I want to welcome you to another edition of the Ohio Virtual Tax Academy. This has been very successful for us over the last few years since we started this. We've had 9,687 attendees who have earned 24,369.5 free continuing education credits. That's CLEs for lawyers and CPE for the CPAs out there. So this has been very, very successful. We are thrilled to continue doing this for you. What are we going to cover today? Today we're going to cover a couple of subjects. First is tax on small business, and secondly is we've been undergoing a new modernization of the Ohio Business Gateway. We call it OVG 3.0, and it's about to become live here pretty soon. So we thought we'd take this opportunity at the OVTA today to give you some previews as to what those screens are going to look like for various tax types that you're going to need to know about. So we're going to use this opportunity today to give you that preview. What are the taxes we're covering today? We're covering employer withholding. We're covering the International Fuel Tax Agreement, or otherwise known as IFTA. We're covering sales and use tax and CAT, commercial activity tax. This is going to be very useful to you because you're going to be back in here using this new system here pretty soon. So that's it for today. I want to thank all the presenters who are going to be putting this together. They worked very hard putting their PowerPoints together for you. I want to thank our subject matter experts who are going to be watching the computers and answering your questions as they come in. I want to thank organizational development because they're the people who put all of this together for us for the OVTA. So I want to thank the Ohio Chamber of Commerce for helping us to disseminate the OVTA to the public and tax practitioner community out there. But most importantly, I want to thank you. your attendance, your participation in this is what makes it successful. So I want to thank you all for being here again at this OVTA today, and look forward to more interesting OVTAs in the future. Thank you.
Okay, thank you, Mr. Commissioner, for that welcome. At this time, we're going to go ahead and get started with the presentations, starting with our first presentation titled Tax for Small Business.
Thank you, Nate. My name is Michael Boberg. I'm a manager here at the Ohio Department of Taxation in the Taxpayer Services Division, and with me is Liam Fitzgerald.
I'm a tax examiner in our Taxpayer Services Division. So for Taxpayer Services, we are the division who you would be speaking to if you call in for any tax questions. We can help you with filing assistance, or if you need login assistance with the Ohio Business Gateway, or we can answer any other tax-related questions. So as far as contacting us, our hours are going to be 8 to 5, Monday through Friday. The phone number, as you can see on the screen there, is going to be 888-405-4039. And we also have an email option that's available that we'll actually touch on later in the presentation. As far as our presentation goes today, we're going to be talking about Ohio sales tax, Ohio and school district withholding taxes, and the commercial activity tax as they go for small businesses. We'll also get into how to register for those taxes with the Gateway, touch on some other agencies that you may need to be contacting as you start your small business, and we'll go forward with some resources that you can access on our website. So Michael, as a consumer, I pay sales tax at the store when I buy an object or an item, but then the store has to then pay that to the state. Isn't that double taxation?
Well, no, it's not. It might seem that way since it seems as though there are two different tax transactions that take place. But in actuality, there's only one person who's truly paying the tax. And in this case, it's going to be the consumer. So when you go to the store and you pay your sales tax, which is good, by the way, you want to make sure that the consumer is the one who actually makes that payment. What the business will do is it will hold on to that tax. When it comes time to file their sales tax return, they'll send that payment in to the state, but it was never money that was theirs. Sales tax is what's considered to be a trust tax, which basically means that the consumer is trusting the business to hold on to their tax money that they owed for their purchase, and the state is then trusting the business to send that payment back into us when it comes time to file their return. So it doesn't actually come out of the business's profit. It doesn't come out of the business's pocket. Any sales tax that the business sends to the state was already paid by their consumers, by their customers, and they simply are the ones who send it in to us when it comes time to file their return. There are some examples when a business might have to pay sales tax, but that would only be in the event that they are actually the consumer of the product. So as an example, if I run a business and I want to purchase furniture for my business, office furniture, but my business has nothing to do with selling or repairing or doing anything else with office furniture, I'm going to be the one who's using it. I'm going to sit in the chair. I'm going to use the desk. In that case, the business would pay sales tax. Simply being a business doesn't mean you're exempt from all sales tax. In this example of a business making a purchase that it is going to benefit from, the business is the consumer. The business pays sales tax at the time it makes the purchase, and then whichever company sold the furniture to that business would send that sales tax in with their return. Again, if I was in the business of selling furniture, I would not have to pay any sales tax for that sale. The consumer I sold it to would give me the money for it. I would then send it in to the department. So it's not double taxation.
Okay, so what if I, as an individual or as a business who's purchasing items for our use as a business, what if we don't pay sales tax when we make that purchase?
Well, there are still a few ways that tax money can be sent into the state. If, excuse me, if you are an individual who makes a purchase and you're not charged sales tax, and there are multiple reasons why that might happen, probably the most common is if you're making a purchase online. So as a consumer, an individual, I go to a website, I make a purchase, but the website is based out of, let's say, California or some other state where they're not charging Ohio sales tax. Since I'm in Ohio when I make that purchase, as the consumer, I still owe that sales tax. In this case, we would refer to it as use tax simply because it comes from the other direction. I'm using that product, I am the consumer, I owe the tax on it. So as an individual, in Ohio we have a form, it's referred to as the IT-1040. That is your personal income tax return. It's due the same time as the federal income tax return form is. On the Ohio form, there's actually a line that will allow you to report the sales tax that you still owe for any purchases that you weren't charged when you initially made that purchase. As a business, you have another option, which would be, let's suppose you have, again, a similar scenario. You're a company that makes purchases online, or for whatever reason you're not charged sales tax when you should be, but it's an ongoing scenario. In that case, you can create what's called a consumer's use account, which is an account which will then allow you to send us a return, a tax return, with whatever sales tax amount you still owe. The other option that we would have would be for someone who is not an Ohio resident, will not be filing an IT-1040. They've made a purchase in the state of Ohio, weren't charged sales tax for, again, whatever reason that might be. We do have a form referred to as the VP use, or voluntary payment use form, that they can send that tax payment into us at that time. The thing to bear in mind as far as whether or not a purchase is going to be taxable or not, it's not something that's determined by the seller of the product. It's actually specified in the Ohio Revised Code, which is the state law for the state of Ohio. In the Revised Code, it basically says that all sales of tangible personal property are taxable unless there's a specific exemption that says otherwise.
And tangible personal property is something that can be perceived, right? Like I can pick up this desk if I wanted to, or something that can be touched, moved, smelled, seen, something like that.
Correct. So basically things are tangible personal property. The Ohio Revised Code does go into a detailed explanation and definition of what exactly tangible personal property is, but the rule of thumb is if it exists and it's a thing, it's taxable until we can prove otherwise. There are exemptions that the law has specified, and you can actually find a list of these exemptions at the Department of Taxation's website, which is tax.ohio.gov. At the website, you'll see on the bottom of the page, there are a list of icons. And this screenshot that we're showing, this is the home page for our website. These icons are at the bottom of every single page on the site. You don't have to be on the home page. So the first one that we see highlighted there is the FAQ section, which is frequently asked questions. In the FAQ section, if you were to click on that link, it'll take you to a page where you can then select the category. So here we have that highlighted. In this case, we've selected the category of sales and use, applying the tax, what is and isn't taxable. So that will take you to a list of various questions regarding the taxability of purchases. Question number 2, as you see highlighted there, says what sales are exempt or accepted from sales tax. And here we have a comprehensive list of the different types of things that would be exempted, or the different scenarios where a sale would not be considered taxable, even though on the surface it would appear that it was, because an actual item of tangible personal property was being sold. So on the website, when it goes into the information, it'll show in sort of a quick glance way to see if something is taxable or not. But all the information that's found in the FAQs, it's all based on the Ohio Revised Code.
So how does a business know if their consumer or the person who's purchasing from them is exempt? Do they just take their word for it and trust them?
No, unfortunately, it doesn't really work that way. What we have set out in the law, again, with the Ohio Revised Code, is there's a provision for a consumer who's claiming that they are exempt to provide what's called an exemption certificate to the business. Therefore, if you're making a sale and your customer comes in and says, don't charge me sales tax, they have a way that they can prove to you, the business, that they don't need to have that. And these exemption certificates can be found at the website. And again, that's www.tax.ohio.gov. If you go to the forms page at the top of the screen, you'll see where you can actually do a search for a certificate. So in this case, looking for an exemption certificate, we've got a portion of the screenshot there. you can just type in a form title or number. In this case, you can just type STEC, which stands for Sales Tax Exemption Certificate. If you type that in, you'll see that there are several different types of certificates that are presented there. And based on the type of sale that's taking place, you may need to use one of the other ones that are there. But the most common one is the one that's listed first, Sales and Use Tax Blanket Exemption Certificate. The STECB form is for a situation where you have a consumer and a business, consumer and a seller, and they have ongoing relationships. So every month, let's say, the seller is going to have this same customer come in and make the same type of purchase. Instead of having to present a separate exemption certificate for each and every purchase, the seller can just hold on to this blanket form that they receive from the buyer. The seller holds on to that form, keeps it with their records, and then each time the buyer comes back, the blanket certificate, think of a blanket that covers things over, the blanket certificate will cover each of these type of purchases going forward. When the consumer brings in this form, this exemption certificate, the consumer will have filled it out. It's going to have some questions on there related to who the consumer is and why it is that they're claiming exemption. When they give this form again to the business holds on to it. They do not need to submit that to the state. It doesn't come in with their return. They keep it with their records. And again, that way they can continue that ongoing relationship without needing a new piece of paper for every single purchase that's being made. And again, there are a few other types of forms, but that blanket certificate is the most common one.
All right, so we've talked about how tangible personal property is going to be taxable unless we prove otherwise. But what about services? Are services going to be subject to the sales tax as well?
Well, there are many services that will be subject to the tax. Even though there's not a thing that's being sold, there is still something of value, and that's that service that's being performed. So in many cases, the service will be taxable, but there are also many cases where the services are not. So if you wanted to find out exactly where those were, again, just go to tax.ohio.gov. If you go to that frequently asked questions link, and again, select that same option of sales and use applying the tax, questions number 3 and 4 on the website will go into detail about which services are subject to the tax and which ones are not subject to the tax. And once again, this is all based on the law as set out in the Ohio Revised Code.
Okay, so now we know what is taxable as far as services and tangible personal property, but how does somebody who's making a taxable sale collect the tax? What do they have to do now?
Well, the first thing that you have to do as a business is to get what's called a vendor's license. The vendor's license is what's going to give you authorization from the state to hold on to that sales tax money. So again, we're talking about a trust tax. The consumer, when they come in, they should see your vendor's license posted on the wall or posted somewhere. That way they know that you have been authorized by the state to hold on to their sales tax money until you're ready to file it with us. There are basically 3 different types of accounts that you can create to collect Ohio sales tax. And the first one is called a county vendor's license. There's a transient vendor's license, and there's also what's referred to as a seller's use account. There is no longer an option for a delivery vendor's license or a service vendor's license. Under no circumstances should you ever apply for a delivery vendor's license or a service vendor's license. They are no longer active accounts. Most of the types of taxpayers who would have used those 2 vendor's licenses that are now defunct, most of them have been replaced by a county vendor's license. So what you would do is apply for that county vendor's license, and that's going to cover sales from a fixed location and sales that are of a service. The county vendor's license should be set up for each separate location that's a fixed location from which you make sales. So let's say, for example, there's a general store down the street. That general store has a brick and mortar location. They have their own address. They receive mail there most likely. You can open a door and walk in. This is a fixed location for the store. The store doesn't go anywhere. In that case, they need a county vendor's license for that location. Now, it may happen that the owner of this general store decides to expand and they're going to open up a second general store. They're keeping the original. It's going to continue to do business there, but they're going to open a separate location. In that case, they will need a second county vendor's license for that second location. And for each location they open from that point on, each one requires a county vendor's license if those locations are in Ohio. Now, this doesn't mean that they're going to have to be sending in lots and lots and lots of returns. Once you have multiple vendor's licenses, multiple county vendor's licenses, you can report them all under one single cumulative master account. That way there's only one return that you have to worry about sending in each month. But each fixed location needs that county vendor's license. The county vendor's license is also used for internet sales. So if you have a scenario where you're making sales from your home or maybe from an office, but they're going through online, wherever that computer is based, wherever you are located, that would be considered your location. And again, you would get a county vendor's license. The transient vendor's license is for Ohio-based companies that are making sales from mobile locations. So for instance, let's say you sell t-shirts at concerts. Well, this week the concert might be in Cleveland, but next week it's going to be in Dayton, and then after that it's going to be in Toledo. So with that being the case, you're not making a sale from one fixed location. You are taking your goods with you somewhere else to make sales from various locations. Other examples would be things like flea markets, public auction houses sometimes have that scenario as well. So if you are taking your goods with you to sell tangible personal property somewhere else, again, that is a transient vendor's license you will need. And that third type of account we talked about, the seller's use account, that's actually not for Ohio businesses. If your business is based in Ohio and you make sales in Ohio, you should not get a seller's use account. The seller's use account is for businesses based outside of Ohio that make sales into the state. So we talked previously about a scenario where you make a purchase online from someone out of state. In that case, if that seller who's based out of Ohio wanted to collect the Ohio sales tax, they have that option of creating a seller's use account. That way they can take that service on for their customers of collecting the sales tax, and the customer then does not have to report that use tax separately.
So when the seller is charging the sales tax, what are they basing that on? Is it based on their profit?
Well, actually, it's going to be based on what the price is considered to be. So again, if you were to go to our website, which is tax.ohio.gov, at the bottom of the page, you'll see there's another icon towards the middle that's highlighted there, information releases. When you click on that icon, you'll see there are multiple options for the different types of taxes. So if you have a question that's not covered in the FAQs, there's a good chance it's going to be covered in that information releases section. So when you select information releases and you go to the sales and use tax area of it, we actually have an information release that deals directly with what is included in the price. So bearing in mind that the consumer is who actually pays the sales tax, that means that the consumer is the one whose price really matters. So as a business, your cost of doing business, the cost of goods sold, anything that you're taking into account for how you create your price doesn't factor into the sales tax. The only thing that matters is what did that last person in line, what did the consumer actually have to pay for the item or for the service. That is the price. That is what the tax is based on. So at this point, we're going to take a few moments to recognize the code word. The code word is collect. Again, the code word is collect. That is your first code word.
Okay, so what if I, as an individual, decide that I want to have a yard sale? Now I'm selling tangible personal property. Do I have to get a vendor's license and collect sales tax?
Generally, no. In a situation like that, you're going to be making what's called a casual sale. And again, this is outlined in the Ohio Revised Code. But casual sales are for scenarios where you're not really in the business of making this sale. So if you're selling used items at your yard sale, these are things that you purchased maybe years ago, you've used them, you actually paid sales tax when you bought them. You were the consumer, and you got the use out of them that you were intending. So let's say, for example, you bought the big new TV 5 years ago, and it was perfect for you, all the bells and whistles. So you bought that TV, you paid sales tax at that time, and for the last 5 years, you have been enjoying yourself as you watch that television. But now there's a new, bigger, better TV out there, and you are ready to buy that one. Well, there's nothing really wrong with your old TV except that it's old, and it's not as good as the new one. So you don't want to just throw it away. You want to maybe get some kind of a return on it, maybe help somebody else out who wants the old, new TV. So you're going to have a yard sale. Somebody comes, they make a purchase of that television set. Again, you were using it. It was a thing that used to be yours, and you chose to, instead of throwing it in the garbage, sell it to somebody else. This is considered a casual sale. So not every single sale that occurs is going to be taxable. Again, yard sales, garage sales, that's going to be the exception to that. If you are making a sale, but it is not your business to sell these things, in that case, it's considered a casual sale.
Isn't that what businesses do too, though? They purchase things and then go ahead and resell them to their customers. So isn't that the same thing?
It's not quite the same thing. Even though there are sales taking place at multiple levels, if you are in the business of selling items, when you go to your wholesaler and you make the purchase for them, you didn't buy it so that you can use it. You bought it so that you can sell it. So let's go with that example of TVs. So let's say you have your own big store where you do nothing but sell TVs all day long. If that's what you're doing business at, that's your job, that's how you make your money, is by selling TVs. That's going to be different than a casual sale. This wasn't a case of, hey, I have this thing, I'm just going to sell it instead of throwing it away. This is a case where you are actually in the business of selling televisions. In that case, this is not a casual sale. This is what's considered as a taxable event when you are in the business of making this type of sale.
So where do we draw the line? What's the distinction between reselling and a casual sale?
Well, it's not something that is just going to be left up as a judgment call. Again, the Ohio Revised Code specifically outlines. And where we draw the line is that sales cannot take place at the same location more than 6 times in a year. In that case, let's give the example of a yard sale. Let's say it's you've just gone through, you've done your spring cleaning, you're ready to have a yard sale or garage sale and sell some of these old things that you found. So you decide Friday, Saturday, Sunday, you're going to take a whole long weekend and just sell all these things. Well, at this point, this has now happened 3 times in one location. These are all casual sales. Then let's say as autumn comes around, you're ready to get rid of a few more things. You have another yard sale. Same year, 6 months later, and you decide to do the same thing. Friday, Saturday, Sunday, nice long weekend to make sales. Again, that's 3 more. So now you have done this 6 times within 1 year. At this point, all of those sales are still considered to be casual. Well, let's say things went so well, you want to hold the sale over 1 more day in autumn. You're going to go ahead and on that Monday, you're taking the day off work from your job, and you're going to stay home, and you're going to keep selling from your garage. At that point, that is the 7th time for the year, and that is where the line is drawn. At that point, you are now considered to be in business. All of your sales are now taxable. So again, that's where we make the distinction, is not how much you sell, not how many items, not how much you're making. It's how often does it occur. And if it's more than 6 days in a year from the same location, it cannot be considered a casual sale anymore. So let's take a moment to do a little bit of a check your knowledge. So let's see if you were listening here, Liam. What is the difference between a casual sale and reselling?
Well, a casual sale is something where you're not in the business of making sales. It's just you used an item as an individual and now you want to get rid of it. You don't have to have a vendor's license. You don't have to collect sales tax unless this happens at the same location more than 6 times, like you just went over. As far as reselling, you as a business, you are in the business of selling things, so you have to purchase them from a wholesaler. So when you make those sales to your consumers, you have to collect sales tax. You have to have a vendor's license. So in that case, it's basically the difference is are you in the business of making these sales or not?
All right, excellent.
Thank you. Okay, so how does a business know what the rate is or how much to collect for the sales tax when they're making these sales?
Well, in the state of Ohio, the rates are going to vary based on the county. So the way the law is set up is that there is a base state rate that's going to be collected for the state, but each county has the ability to determine an additional amount that will be collected for that county. So as an example, Montgomery County's total overall sales tax rate is 7.25%. Greene County is 6.75%. Miami is at 7%. So depending on where you are in the state, you're going to pay a different sales tax rate. The way that you can find the rates is if you go to this wonderful website, tax.ohio.gov. We've got the rates listed there. And it's important to bear in mind that the rates can change. So the counties are going to determine the amount that they're charging. and maybe 6 months ago they charged a certain amount, but they made the decision to increase or possibly even decrease. That happens too, the rate that's supposed to be charged. So it's important to keep up with those rates. And one of the easiest ways to find what the rate should be is by using a tool called the Finder. So again, looking at tax.ohio.gov, at the bottom of the page, that list of icons that shows up on every single page on the website, you'll see the one that we have highlighted listed there called the Finder. If you click on that, you can choose to look up the rate for sales tax. All you need to do is type in your address where the sales will be taking place. This is especially helpful for transient vendors license who are going to be all over the state. Again, simply type in the address where you're going to be making the sale, and the Finder will return back which county you are in and which rate you should be charging on the sales tax.
Okay, so now I've started my business, I've started making sales, collected sales tax, got my vendor's license. Now what do I do? Okay,
well now it's time to file that return. Sales tax returns are referred to as the UST1, Universal Sales Tax Return. It's the UST1. This is a form that is required by law to be filed electronically, and you can do that on the Ohio Business Gateway. We'll have more information regarding that website later in the presentation. County vendors also have the option of using a telephone system referred to as telefile. So in many cases, county vendors may use a push-button phone to actually report their sales tax. All transient vendors licensed and some county vendors licensed that are ineligible for telefile will have to use the Ohio Business Gateway instead. Your filing frequency is determined by how much you make, how much you make in sales. So if you are set up as a semi-annual filer, those are going to be generally for businesses that are seasonal, or maybe they just do something on the side where they don't make many sales each month. If you're a semi-annual filer, your returns are going to be due on the 23rd of January for the second half of the year, and on the 23rd of July for the first half of the year. And everyone's got the same outline schedule, regardless of when you create your account. January 1st to June 30th, again, you report that money on July 23rd, and your next return is due January 23rd. Monthly returns for monthly filers, which is where most companies fall in, are going to be filing on the 23rd of the next month. So you've got just over 3 weeks to get your figures together. So for instance, the April return, all of the sales that you made during the month of April from the 1st through the 30th, you're going to report all of those sales by May 23rd. And the nice thing about the sales tax, again, it doesn't come out of the business's pocket. This is all money that the consumer paid to them at the time, and it should have been kept separate from all other funds. But if the return is filed and the payment is made timely, early or on time, the state actually gives a discount on that return, and it does actually allow the business to keep a small portion of that sales tax that they collected.
Well, that's a lot of information there with due dates and filing frequencies and everything. Is there anywhere I can find all of that?
There sure is. If you just go to tax.ohio.gov, you'll see that at the top of the page, again, we have links, one that shows business. If you click on that link, you'll be able to select the different types of Ohio taxes, and you'll see we have a whole page for sales and use. On this page, you're going to be able to see how to make a payment, how to file a return, rules for registrations, list of active vendors, tax rates, all the information that you need is all available right there on the website. So do you have any other sales tax questions for me, Liam?
No, I don't think so. I think you answered all of that adequately. Thank you very much.
Okay. Well, I have some questions for you then, if I may, about employer withholding tax. Okay. So I know that when I get paid, employer withholding taxes are taken out of my paycheck. Yes, even though I work for the state of Ohio in the Department of Taxation, taxes still come out of my paycheck. So taxes are withheld from me as an employee as they're withheld from other employees throughout the state. So we are paying these taxes, and yet I know that businesses have to pay employer withholding taxes. They have to send money to us. Isn't that double taxation?
Actually, no. So the withholding is going to be just like the sales tax. It's what we call a trust tax. So again, it's not going to be double taxation. You as the employer are withholding that money for your employee, taking it from their pay, and then eventually remitting it to the state, paying that money to them. So it doesn't come out of your profit, just like the sales tax. It's the employee's money that you're holding on to and then remitting it to the state.
So then how does a business know that they have to withhold taxes?
So any business operating in the state of Ohio is going to be subject to the Ohio withholding tax. Basically, if the money is being earned in the state, then it is subject to the tax here.
So, for example, if a football team goes and plays a professional football game in Cleveland, even if the team is visiting from another state, those players, the income they earn for that game is taxable to Ohio?
Yeah, that's correct. So any employee of that football team that comes into this state to work, whether they're a player or part of the staff of the team, the income they earn in this state is going to be taxable to Ohio. Now, there is one exception to that, and that goes for residents of other states, or sorry, not other states, but neighboring states of Ohio. So that would be Michigan, Pennsylvania, West Virginia, Kentucky, and Indiana. Those 5 states, we have what's called a reciprocity agreement, where we don't charge or collect withholding taxes for residents of those states if they earn money in Ohio.
So is the rate then, does that work like sales tax where it's different depending on where it happens? So let's say that team we talked about, they played last week in Cleveland, but next week they're going to play in Cincinnati. Are they going to get charged a different rate based on where they're located?
No, actually. So like with the sales tax, each county enacts their own separate rate, and it can be different depending on where you are in the state. With withholding, it's going to be the same rate, but it depends on how much money the employee is earning. So there's not a flat rate in Ohio, but it depends on how much money the employee earns. So if you're earning a lot of money, $100,000 a year, you're probably going to pay more. You're going to pay more in withholding taxes than somebody who's earning $35,000 a year. It's just a different, like I said, not a flat rate, but it depends on the amount of money being earned.
Okay, so how can I find some more information regarding this information?
Well, if you go to our website, which is tax.ohio.gov, just like we had a sales tax page, there is a withholding page as well, where you can get all kinds of information as far as information for the tax. There's general guidelines on who has to pay. If you are a business within Ohio operating here, you have to pay. You can also find the tables that are set for different percentages based on money earned as how to calculate that withholding tax.
Now, I noticed looking at this page here, as I glance down, it keeps talking about school district. Do people have to pay a tax for school districts?
Yeah, some people do. Not every school district in Ohio has an income tax, but a lot of them do. That is separate from the Ohio withholding tax. So if you do live in a taxing school district, your employer is to withhold for you the state withholding and then a separate amount for your school district as far as a withholding income tax. And if you do live in a taxing school district, as an employee, you should advise your employer that you live in that taxing school district. Once you tell them you live there, then they will, from that point, withhold for you for that individual school district.
Well, then how does someone know if they live in a taxing school district?
Well, if you go to our website, again, that is tax.ohio.gov. You can use the tool for the Finder again. As you can see on the homepage here, we have it highlighted on the bottom, just like Michael was saying. All the icons are going to be on every page. So if you click on the Finder, and as an employee or an employer, either one, you can search by the employee's address, and that will return for you the school district that that address sits in, whether it is or is not taxing, and what the rate is for that specific school district.
Okay, so I can determine whether or not my school district taxes, but what if I don't have any kids in school?
Well, like we were saying before, it's not going to be based on whether or not you're utilizing the school system. The school district income tax is based on residence of the employee. So it's actually an income tax that is set forth by the school district. They contact the commissioner or the tax department and say, hey, we may need some extra funds coming in. This is how we want to enact the school district tax, and then the commissioner will say, okay, you probably want to charge this rate for the amount of money that you think you might need. And then once that gets approved, it's not final yet. It's actually voted on by the taxpayers who live in that school district. So if they vote yes, obviously we want the school district tax, then each resident of that school district will then be subject to a withholding for this separate income tax, and they should advise their employers that they now need to be withholding for that school district.
Okay. So now I know who's supposed to pay. It's coming from the employees, but how does that money get remitted to the state?
So there's returns that has to be filed every so often, either monthly or quarterly for withholding, depending on how much you're withholding throughout the year for your employees. Most small businesses are going to be remitting that to us on a monthly or quarterly basis. Larger businesses can be subject to pay on what we call a part weekly basis, which goes based on how often you run payroll. That's their withhold. They have, hundreds and hundreds of employees. They're withholding a large amount of money each payroll period. For the purposes of this presentation, for smaller businesses, you're mainly going to be paying or filing your returns either monthly or quarterly. Those monthly and quarterly returns are called an IT 501, and that's how you remit to us what you withheld for your employees. For the monthly returns, those are going to be due on the 15th of the following month. So if you were a monthly filer and you were ready to remit your withholding for the month of April, everything that you took from your employees, withheld for your employees for April, that return would have actually been due by yesterday, May 15th. As far as quarterly filers go, those returns are going to be due on the last day of the following month of the quarter. So for the first quarter, that would be January through March. Your IT 501 would be due on April 30th. And then for the second quarter, July 31st, third quarter, October 31st, and then for the fourth quarter, that would be January 31st of the following year. And then at the end of the year, the business also has to reconcile what they have filed and paid to the state using a form called an IT 941. This is also going to be due by January 31st of the following year. And it does not actually take the place of that final IT 501. So if you're a quarterly filer, you have to file that fourth quarter IT 501, as well as the IT 941. Also monthly, you have to file your December 501 and your IT 941. And we do want to note that this is a separate form from the IRS 941. That is the federal form in which they report their withholdings for federal tax purposes. Our form is called an IT 941 that is specifically for Ohio taxes. And all of these returns are actually required to be filed electronically, just like the sales tax returns are. There is no telefile option. These are going to be filed through the Ohio Business Gateway electronically every month or quarter.
Okay. So then for that school district tax that we talked about, school district taxes, we report those in the same forms, is that right?
No, actually the forms are going to be different. Your account number is going to be the same. So when you register for your withholding account for the state, you actually get the same account number for your school district, but you have to remit it separately. So for a school district, the filing frequencies are going to be monthly and quarterly. There is no part weekly for the school district. So if you were a larger business and you were reporting to us every payroll period, if with your school district, you would then just qualify as a monthly filer and report those every month. The due dates are going to be the same. So for monthly filers, the 15th of the following month, and for quarterly, it would be the end of the month following the quarter. And then at the end of the year, you have to reconcile these withholdings as well with a form called an SD 101. And I don't think I mentioned the monthly or quarterly form. That's called an SD 101. The reconciliation is an SD 141. So, and that is also due at the end of January for the following year. So, do you have any other withholding questions for me?
No, I think you did a good job explaining all of that.
Well, thank you, Michael. So we've talked about withholding and sales tax. We've notified that they're both trust taxes. It doesn't come out of the business's profit. You're holding onto that either for your employee or your consumer, and then remitting that to the state whenever the time comes. Are there any taxes that the business themselves has to pay that comes out of their pocket in the state of Ohio?
Yes. And the most common is the commercial activity tax, which is often referred to as the CAT.
So there's a tax in Ohio called the CAT? What is that?
Well, it's got nothing to do with pets. go ahead and make all your jokes about cats. Commercial activity tax is just a longer sentence than saying cat, so that's why it's often referred to as cat. But basically what it is, it's a tax that not everyone is subject to in Ohio. There are no requirements for a business to start paying cat immediately when they go into business. It's only going to be for companies that hit a certain threshold. So again, the smallest businesses never have to worry about it. Basically, what's going to happen is the minimum threshold to be required to file commercial activity tax is going to be whether or not you receive in one taxable year $150,000 in taxable gross receipts. So if you receive $150,000 in gross receipts during the same calendar year, at that point you would be required to begin filing for the commercial activity tax. Prior to that moment, you don't need to do anything. You should not register until you hit that point. So when you first open the business, there is absolutely no requirement for commercial activity tax. If you make it to that $150,000 in gross receipts, again, we're not talking about the cost of doing business, we're not looking at profit or loss, anything like that, simply the money coming in. When that's at $150,000 within the same calendar year, January 1st to December 31st, at that point, you would be responsible for the CAT. Now, it's important to note that we're not talking about any 12-month period. So if you start your business in July and you make $100,000 and then December 31st comes, and let's say you make another $100,000 between December 31st and June, now you've made $200,000 total within a 12-month period. That is not something that we're looking at for CAT. We're looking at January 1st through December 31st. So in each of the separate calendar years that we talked about, you have a $100,000 in each year. You're still not hitting the minimum threshold for commercial activity tax. So again, just to give it one more go around, January 1st through December 31st, if your business takes in $150,000 or more, at that point, you are now responsible to register for and file the commercial activity tax.
So does this tax apply to all business types? What if I just decide that I want to be a sole proprietor, I'm making online sales, through Amazon or just selling some of my stuff online, making online sales? Am I subject to the commercial activity tax?
As long as you make that $150,000 within the calendar year, yes. It does not matter how you structure your business. You can be a C corporation, LLC, sole proprietor, whatever the case might be. If you're earning money in Ohio, if your business is taking in gross receipts that are taxable in Ohio, you're going to have to register for the commercial activity tax within 30 days of earning that $150,000 in the same calendar year. So again, it doesn't apply to, or it doesn't really matter what type of structure you have. If you're in business, you hit the threshold, you have up to 30 days to register for the CAT, and from that point forward, you're going to be required to continue to file and pay.
Okay, so when businesses become subject to this tax, how do they know how much they have to pay?
Well, everyone's going to have an annual minimum tax. So the annual minimum tax is going to be, for most companies as they first start out, it's going to be $150 for the year. The annual minimum tax is what covers that first million in your gross receipts. So if you don't ever hit $1 million within 1 year in gross receipts, you'll never pay more than that $150. That's the only amount that you're going to have to pay.
What happens when they hit $1 million in gross receipts?
They celebrate. But then they do it briefly. At that point, they realize they're going to have to actually pay more in taxes. Sorry.
They have to pay more in taxes now? Well, how much more?
Well, the good news about it is that it's one of the smallest rates you're ever going to see in tax or anything else. The tax rate is just over 1/4%. We're talking about 0.0026, and that's only applied to the dollars that are earned over 1 million. Their annual minimum tax covered everything up to the million. Over $1 million, the rate is 0.0026, just over 1/4%.
So you're telling me they have to pay 25% of their receipts over $1 million?
No, I'm saying they have to pay 25% of 1%. So basically, and that's slightly off. It's just about 25. 0.0026. The business keeps 99.74% as it relates to the commercial activity tax. So the rate itself is mathematically not much room to get smaller than where it is right now. So again, one of the lowest rates you're ever going to pay for anything.
So in other words, the only way you're paying a lot in commercial activity tax is if your business is making a significant amount of money.
Exactly. Paying the CAT is actually a nice problem to have. It means that you are actually bringing in a considerable amount of money. So when a company comes in and they pay their annual minimum tax, they are paying that first $1 million. After that million is done, at that point now we are talking about where they would pay that additional amount, just above $1 million. The other thing that is affected by hitting that $1 million threshold is the minimum tax. So for those smaller companies that never hit the million, their annual minimum tax is going to be $150. But companies that go over the million, they're going to actually pay a bit more.
So now they have to pay more in their annual minimum. Prior to that, you said their annual minimum was just $150. So how do we know they have to pay more now?
That's correct. And basically, there's a tiered structure to the annual minimum tax. And I can break it down like this. Basically, if you owe 0 to $150,000 in taxes, at that point, or I'm sorry, I should say, if you receive 0 to $150,000 in gross receipts, you owe 0 in taxes. There's nothing actually due. There's no requirement for the CAT at that point until you've hit the 150 for the first time. If you earn between $150,000 and $1 million, your minimum tax will be $150. After that, there's nothing else that's going to be owed because you haven't gone over the point where we begin taxing the additional monies. If you earn $1 million or more, there is a tiered structure based on exactly how much you are bringing in with your gross receipts. And that tiered structure is going to change based on the level that you've actually earned. So if you earn between 1 and 2 million, it's one tier. Between 2 and 4, it's the next. And then anything over 4 million has a separate tier for what your annual minimum tax, which will be due every year, is going to be. So we do have an information release on that, which is found again at our website, tax.ohio.gov. Remember that information release is linked. That's at the bottom of every page. If you select that, you'll see we have the list of all the taxes. If you select commercial activity tax, the one that we have highlighted here shows the tiered structure, which is has a nice chart on it that breaks down the tier for how much your business will be paying for the next year's minimum tax based on what you reported for your earnings this year.
All right, so as a business now, I know I have to pay an annual minimum tax, and if I reach a certain threshold over $1 million, I may owe more in taxes on those receipts. But how do I pay that to the state? Is there a return that I can mail in?
Well, there is a return, but no, you cannot mail it.
Oh, shucks.
Language.
Sorry.
Well, there is a law that requires that all taxes for commercial activity tax be filed electronically. So as we've mentioned before, we have the website, Ohio Business Gateway. Annual filers will have the option of using the telefile system, but it is required to be done electronically. Again, all taxpayers for commercial activity tax can use the Ohio Business Gateway. Annual filers have the option of using the telefile phone system.
So this is something about annual filers. How does a business know if they're going to be an annual filer? What is the other option that they could potentially file this tax?
Well, they may be required to file quarterly instead. And once again, we're looking at that $1 million threshold. If you're under the million, and generally this is going to be the case when you first initially create your account, you will be considered as an annual filer. Once you go over that million and you've reported that you've been over the million in gross receipts, you'll be changed to a quarterly filer. The annual filers, their deadline is going to be on May 10th of every year. The exception would be if May 10th falls on a weekend or a holiday, a non-business day. In that case, the deadline would be the next business day. And that goes for all the deadlines in the state. But again, annual filers, their return is due May 10th, which basically gives them over 4 months to get their figures together from the end of the year before the return comes due. Those quarterly filers, they're going to have a return due about 40 days after the end of their quarter. So their first quarter return, the first quarter ends on March 31st, and the return is going to be due on May 10th. The next quarter is going to end on June 30th. That return is due on August 10th. November 10th, February 10th for the fourth quarter. So again, about 40 days after the end of the quarter is when that return is going to be due.
Well, that's a lot of information again. How am I supposed to remember all that?
Well, the nice thing about that is that you don't have to just remember it all off the top of your head. We have an amazing website. It's tax.ohio.gov. And once again, all this information is available there. If you go to the website, you'll be able to find where we have the tutorial videos. We have the information about what the due dates are going to be, how to register, various information about the commercial activity tax. It's all available on the website.
Well, that's easy enough.
That's what we try to do, is make things easy. So here we are talking about businesses that pay taxes. But how does a business actually get started on their taxes?
Well, I thought you'd never ask, Michael. But now we're going to talk about how to register for your business taxes. But before you do that, a business will want to figure out how they're going to structure your business. A couple times we've mentioned, a sole proprietor or a LLC, a limited liability company. You want to figure out what type of business you're going to be. And then after you've done that, you'll want to get a federal identification number for your business. This is like a social security number for the business. It can be beneficial as an extra security measure, and this is something that you use to identify your business. You kind of separates you as an individual from the business. If you wanted to, you could use your social security number. Any information provided to the department is obviously going to be secure. But like I said, the federal identification number, or FEIN, is more of an added security bonus or measure for the business.
Okay, so that federal employer identification number, FEIN, FEIN, whatever you want to call it, is that something I can go ahead and get from the Ohio Department of Taxation?
Actually, no. That's a federal employer identification number, so that number would need to be obtained from the IRS. You can do that by giving them a call, or you can visit their website, which is just irs.gov.
Okay, so are there any other numbers that I'll need to make sure I'm aware of or have before I get started?
Yeah, so before you register, you'll want to figure out what your NAICS code is. That is it's a federal industry code. It's basically an indicator of what type of business you're going to be doing. It's required on all of our registrations. So before you want to do that, go to the IRS website, get your federal ID. You can go to NAICS.com and get your NAICS code. We also have a list of them on our website, which is tax.ohio.gov. And then, or you can go to NAICS.com and you can type in keywords and it'll return your business type there.
Okay, so let's assume that I went ahead and got my federal ID and I know what my NAICS code is. Then what?
Well, now you can register for your Ohio tax accounts with the Department of Taxation. All of this can be done through the Ohio Business Gateway electronically. And if you do that electronically, you'll be able to get your account number and all of your account information immediately.
Well, that's nice to know that I can get that immediately, but what if I prefer to wait 6 or 8 weeks to get my account number assigned?
Well, that's perfect, because we actually have paper registration forms available on the website, tax.ohio.gov. They take approximately 6 to 8 weeks to process, depending on how many registrations we have coming in at the time. So if you know you're going to start a business, but it's not for a couple months down the road, you can send us those paper registration forms and not have to worry about it immediately. We'll send you a confirmation and your account information through the mail within most likely 6 to 8 weeks.
All right, so let me get this straight. I've got all these registrations I have to do. How much are all these things going to cost me, Liam?
Well, Michael, most of them are actually going to be free. So your withholding registration, you don't have to pay for anything with that. Your commercial activity tax, there's no fee for that. The only ones that have a fee are going to be your county and transient vendor's license. That is a $25 fee, and it's actually just a one-time fee. So there's no renewal every year or every 6 months or anything. Just $25 every time you register for a county or a transient vendor's license, and that's pretty much it.
Okay, so as a business, again, withholding is not coming out of my pocket. Sales tax doesn't come out of my pocket. CAT does come out of my pocket, but only if I'm making a considerable amount of money. Is that right?
Yeah, that's correct. Like we said before, the withholding and the sales tax are both trust taxes. So you as a business, you're not taking that out of your profit or out of your pocket. That is something that you're holding on to for your consumer or your employee and then remitting to the state.
Okay.
Commercial activity tax does come out of your pocket, but if you don't get anywhere near $1 million, then every year you're just paying $150.
All right, so then all this tax money that we're sending in, whether it's from us or from employer or consumer, these tax money that we send in, it pays for things like roads and schools and water treatment services.
Yeah, all the tax money goes to infrastructure and certain things like that, improvement for state and local infrastructure and anything that would be beneficial to our taxpayers.
Well, that doesn't sound so bad at all.
No, I don't think so either. So now we're going to go into our second check your knowledge question. So Michael, what type of tax accounts, when you register for them, are going to require a fee?
Let me think. County vendor's license and transient vendor's license, and everything else is free to register.
Yep, that's correct there. All right, and now we're actually going to pause for our second code word of the presentation. And this code word is going to be register. Again, that code word is register. All right, so along with different tax accounts that you can get with the Department of Taxation, there may be other agencies that as a small business you would need to contact in order to remain compliant with state and federal laws.
For instance, if you are doing business in Ohio, you may need to register for a charter number. This is something that you can do through the Secretary of State. Their website is sos.state.oh.us. Unemployment is something else you may need to register for if you have employees. That is not handled by the Department of Taxation. Unemployment is handled by the Ohio Department of Job and Family Services. They have their own website, which is unemployment.ohio.gov.
And if you have employees, you'll probably also need to register for workers' compensation. That is also handled through a different agency within the state. That is the Ohio Bureau of Workers' Compensation. Their website is bwc.ohio.gov. And this is also where having that proper NAICS code is important, because your rates for workers' compensation can differ based on the type of business that you're doing. So if you are, a construction business where there's a higher risk of injury to your employees, your rates might be a little higher than a business who just has employees who are doing desk jobs all day.
And if you're looking for more information about the Ohio Department of Taxation, the best place to go for that is going to be Taxation's website, which again is tax.ohio.gov. And again, on our website, you'll be able to find all the information that we've given you here. You can find the Ohio Revised Code there. You can sign up for tax alerts to get reminders about when it's time to file and how to stay current with state laws. We've got tabs that will cover things such as the self-help e-library. You can do things online through the How Do I portion. We have video tutorials. We also have links to all those other agencies we talked about. Those are available there. And another nice feature is that you can use our website to contact us via email.
All right, so this is, like we said, the home page for the website. Based on the previous screen, we were talking about the different resources that we have here. If you look in the top right, we have the Contact Us. If you click there, you have the email. You have the Business tab there where you can get to all types of self-help, e-library, and tutorials and things like that. And then you have the tax alerts at the bottom there.
And if you select that tax alerts link, you'll see that you have the option of selecting various types of taxes. So if you are only concerned with getting alerts for employer withholding tax, you can only select that option if you choose. If you have all of the different types of taxes, you can select for all of the different types of taxes. So you'll be able to determine what you're receiving from the state. It's not something that we're going to sell your email somewhere else. It's basically just an option for you to help you stay current with different events. You'll also notice at the bottom of the page, there's a tax alerts archive link. So let's say you've just started business, but you want to make sure you're keeping up with any changes that may have come in since you started to do your research originally. If you click on that archives link, you'll be able to see all of the previously sent tax alerts that we've had.
All right, and if you were to click on that business tab at the top of the page, it'll bring you to this page here, and this is where you can, in the top right, we have our how do I, so it gives you kind of information on how you file taxes like we've gone over with the Ohio Business Gateway. Even how do I open a business, so if you're just starting out and you aren't really sure where to go or how to get started, you can come here and it'll give you information about that. Also closing a business, or if you even need to update your business location or contact information, you can do all of that from this page. There's also that self-help e-library that we were talking about that has kind of tutorials on different taxes throughout the state, also with the gateway as well. And then there are tutorials that you can watch there, which is the most bottom highlighted option. And if you would like to email us, like I said before, if you click on that contact button right above the tax commissioner's head on our website, it'll bring you to this page. The second option is an email us button. You email us whatever your tax related question may be, whether it's a filing question or a taxability question for sales tax, anything like that. Send us an email with your information and we will get back to you most likely between 24 and 48 hours.
And if you prefer to actually speak with a living, breathing human being, you can always do that as well. Just contact us at Taxpayer Services. Again, our phone number is 888-405-4039. We're available Monday through Friday, 8 a.m. to 5 p.m. So we're going to have one more check your knowledge just to make sure everyone out there was paying attention. Liam, can I ask you a question?
Sure.
Where can I go to get more detailed information about all Ohio taxes?
Well, I think that website, and I think we've mentioned it a couple of times in this presentation, but it's going to be tax.ohio.gov.
Excellent. And we're going to turn the presentation back over to Nate now. Thank you.
Okay, thank you, Michael and Liam. At this time, we're going to go ahead and take our first break. During this break, all audio and video will be suspended. Please stay logged into the webinar, and we will return back at 9:40. Thank you.